Good morning, everyone. Darius Dale here to present our macro minute for Friday, January 28th, 2022. Starting with markets, we have stocks down this morning with Europe lagging, commodities mixed with energy leading, crypto flat to up, dollar up, global bond yields up. Big movers this morning. We have the Stocks Europe 600 index, Germany's DAX index, and copper down around 2% apiece. WTI up another 1%. On the economic front, yesterday's big beats on headline GDP and the GDP deflator likely gave Jay Powell and his FOMC colleagues incremental confidence to be more aggressive at the outset of the tightening cycle should they deem it necessary. So, headline real GDP in the US came in at 6.9% in Q4. That's the highest print we've seen since the third quarter of 2020. The headline GDP price index also came in at 6.9% in Q4. That's the highest print we've seen since 3Q81. Taking it to the chart, as you know, inflation statistics, pick your statistics, have been tracking around 20, 30, 40-year highs. And this is the latest data point in terms of the broad inflation pressure in the U.S. economy, taking it all the way back to the early 80s. I heard that was a good time, but keeping it moving. Meanwhile, the sharp uptick in inventories is marginally confirming of our forecast for disinflation throughout 2022. So the contribution from inventories to the headline print came in at 490 basis points in Q4. That's the highest number we've seen since 3Q20. Remember, 3Q20 was that big bounce we got off the Q2 lows, which were perpetuated by the April national lockdowns going back to the onset of the pandemic here in the US. But just one thing to call out, 490 basis points, it does account for roughly 70% of the headline growth rate. So not the strongest GDP report when you start to unpack the internals. Saw some negative contributions from pockets of investment and certainly services not only was negative and slowing, but also slowed. So not the strongest print, but from a headline perspective, and obviously these are big beats. I think the Bloomberg consensus had the headline GDP expected to come in at 5.5%. Again, that's 6.9%, significantly higher than that. And then Bloomberg consensus had the GDP price index slated to come in at 6%. That 6.9% price index number was much higher than that. With respect to today's probable range setups, we got an overbought signal in the Bloomberg dollar index, US dollar versus the Canadian loonie, US dollar versus the Swiss franc, US dollar versus the Mexican peso, and the 2-year treasury. Oversold signal the Shanghai in the Shanghai composite and the British pound. With respect to the S&P 500's probable range, minus 3.2% downside versus 7.2% upside. Still bearish VAMs there. WTI ticked down to neutral VAMs on the breakout, and the OVX in energy volatility. It's got 9% downside to its lower boundary of its probable range versus only 3% upside. Bloomberg Dollar Index neutral VAM still raging bull there, or sorry, not bullish VAMs, but still ragingly bullish from a short-term perspective, minus 2.3% of downside, and at the upper boundary of its probable range. 10-year treasury yield bullish VAM still minus 12 basis points of downside versus 15 basis points of upside. Bitcoin still bearish VAMs minus 11% of downside versus 13% of upside. Ethereum bearish VAMs minus 11% of downside versus 26% of upside. And then lastly, gold. That was a good signal by us in the middle of the week. Now tracking right around the lower boundary of its probable range versus 4% of upside. That's still neutral VAM. So with that, Darius Dale presenting our macro minute for Friday, January 28th, 2022. Best of luck out there.